You just started freelancing. Congratulations! You're about to experience freedom most people only dream about. But here's what nobody tells you. The financial side of freelancing is completely different from having a job. No one withholds taxes. No one offers you a 401k. No one tells you how much to save. If you don't set up your finances correctly in year one, you'll spend years cleaning up the mess. In the next 8 minutes, I'm giving you the complete first-year checklist. Do these 7 things, and you'll be ahead of 90% of freelancers. Note: this information applies to US-based freelancers and self-employed individuals. Welcome to the Freelancer's Wealth Blueprint. Let's set you up for success. Thing number 1, open a separate business bank account. This is non-negotiable. Do it today if you haven't already. When your freelance income mixes with your personal spending, everything becomes a mess. You can't track your business expenses. You can't prove deductions in an audit. You can't see how much you're actually earning. Open a business checking account. It takes about an hour. Many banks offer free accounts for sole proprietors. Every client payment goes into this account. Every business expense comes out of it. Your personal account is for your personal life. Your business account is for your business. Never mix them. If you want to take it a step further, get an EIN from the IRS. It's free and takes 5 minutes online. An EIN is like a social security number for your business. You can use it instead of your personal social security number on contracts and tax forms. Thing number 2, set aside money for taxes immediately. This is where most new freelancers get destroyed. You receive a $5,000 payment and think you have $5,000 to spend. You don't. As a freelancer, you owe self-employment tax of 15.3% on your earnings. That covers Social Security and Medicare. On top of that, you owe federal income tax and possibly state income tax. My rule: set aside 25 to 30% of every payment the moment it hits your account. Transfer it to a separate savings account labeled taxes. Don't touch it. On that $5,000 payment, immediately move $1,250 to $1,100 to your tax savings. The remaining $3,500 to $3,750 is what you actually have to work with. This feels painful at first, but it's far less painful than owing $10,000 at tax time with no money to pay it. Thing number 3, learn the quarterly tax deadlines. Unlike employees who have taxes withheld from every paycheck, you're responsible for paying the IRS 4 times per year. The deadlines are April 15th, June 15th, September 15th, and January 15th of the following year. If you don't make these payments and owe more than $1,000 at tax time, you'll face underpayment penalties. Here's the simple approach for your first year. Calculate your expected annual income. Multiply by 25%. Divide by 4. Pay that amount each quarter. You can pay online at irs.gov using direct pay. It takes 5 minutes. Mark these dates on your calendar and treat them like rent. Thing number 4, build an emergency fund fast. Freelance income is unpredictable. Clients disappear. Projects get canceled. Payments get delayed. If you don't have cash reserves, one slow month can wreck you. Your target: 6 months of living expenses in a high-yield savings account. At current rates, you can earn 4% or more on this money while it sits there. I know 6 months sounds like a lot when you're just starting. Start with 1 month. Then 2. Keep building until you hit 6. This fund is not an investment. It's not for opportunities. It's insurance that keeps you freelancing instead of panic accepting a terrible job when things get tight. Thing number 5. Track every business expense. Every dollar you spend on your business is potentially tax deductible, but only if you can prove it. Start a system now. It can be simple. A spreadsheet works. Apps like Wave or QuickBooks, self-employed work. Even a folder on your phone where you photograph every receipt works. What counts as a business expense? Software you use for work. Equipment like your computer or camera. A portion of your phone and internet bills. Professional development courses. Office supplies. Mileage when you drive for business purposes. In 2026, the standard mileage rate is 70 cents per mile. If you drive 5,000 miles for business, that's a $3,500 deduction. Keep everything. At the end of the year, these deductions can save you thousands in taxes. Thing number 6, understand the QBI deduction. This is free money most new freelancers don't know about. QBI stands for Qualified Business Income. As a freelancer, you may be able to deduct up to 20% of your business profit from your taxable income. This deduction was made permanent in 2025. Here's what that means. If you earn $50,000 in freelance profit, you might be able to deduct $10,000, reducing your taxable income to $40,000. That could save you over $2,000 in taxes. There are income limits and restrictions for certain professions. But most freelancers earning under $191,950 as a single filer can take the full deduction. You don't need to do anything special to claim it. It's calculated on your tax return. But knowing it exists helps you understand your true tax burden. Thing number 7, start a retirement account aside. I know retirement feels far away, but here's the math that will change your mind. If you're 25 and invest $500 per month at 7% average returns, you'll have $1.3 million by age 65. Wait until 35 to start, and you'll have only $10,000. That 10-year delay costs you $700,000. As a freelancer, you have access to retirement accounts with higher limits than regular employees. The solo 401k lets you contribute up to $4,500 as an employee in 2026, plus roughly 20% of your profit as the employer. You could potentially save over $30,000 per year in tax-advantaged accounts. If that feels like too much complexity for year 1, just open a Roth IRA. The limit is $7,500 for 2026. You can contribute through Fidelity, Schwab, or Vanguard in about 15 minutes. Even $200 per month into a Roth IRA puts you ahead of most people. Start small. Increase as your income grows. Let me give you the quick recap checklist. 1. Open a separate business bank account. Do it today. 2. Set aside 25 to 30% of every payment for taxes. 3. Mark quarterly tax deadlines on your calendar. April 15th, June 15th, September 15th, January 15th. 4. Build a 6-month emergency fund. 5. Track every business expense from day 1. 6. Know about the QBI deduction and claim it. 7. Open a retirement account, even if you start small. Do these 7 things in your first year, and you'll avoid the financial disasters that sink most new freelancers. You'll also build the foundation for real wealth. If you want to go deeper on any of these topics, check out our videos on quarterly taxes, emergency funds, and solo 401ks. Links in the description. See you in the next one.